Hello everyone and welcome to Moementum channel. My name is Mo, and in this video we're going to talk about some other undervalued stocks that pay dividends in the stock market. Here on Moementum channel we have a lot of investors who are keen on dividend paying stocks, and which is why on this video we're focusing on two of those. Both of these stocks are in the pharmaceutical and healthcare sector and pay a very decent dividend, and are also both showing upwards of 10% upside potential. So watch this video until the end and let me know what you think. The first undervalued stock to review is Amgen. This stock, which is listed on Nasdaq Stock Exchange with ticker symbol AMGEN, was last traded at $227.31, but is showing a fair value of $258.26 USD based on its real or underlying intrinsic worth. This shows an upside of 13.6% growth, but with a low level of uncertainty, making it an enticing pharmaceutical undervalued stock to buy or add to your watch list right now. The fair value is calculated based on Finbox fair value methodology and allows investors to find companies that are being traded at a margin of safety compared to their fair value per share. Looking at Amgen's financials, we notice that the company's revenue has been steadily growing over the past several fiscal years. In its latest quarterly report, Amgen reported $6.4 billion in revenue, showing a 12% year-over-year growth. The company's net profit was also up by 2.7%. As for Amgen's balance sheet, both their current assets and total assets well exceed their current liabilities and total liabilities, respectively. This results in a current ratio of over 1, suggesting that the company has enough resources to meet its short-term obligations. The company is also showing a positive free cash flow, mostly thanks to the cash flow from operations. Looking at peer benchmark review, you'd notice that Amgen has a market cap of over $132 billion. Amgen had a one-year stock return of negative 3.9% compared to an average of 4.2% return for the healthcare sector. From a stock volatility perspective, this stock has a beta of 0.75, which is lower than the beta of 0.78 for the healthcare sector, suggesting less volatility in the stock price for Amgen compared to the sector median. Beta is a measure of risk arising from exposure to general market movements. Amgen is an American multinational biopharmaceutical company that is headquartered in California. It uses cutting-edge science and technology to study the subtlest biological mechanisms in search of therapies that will improve the lives of those who suffer from serious diseases. Amgen does pay a quarterly dividend. Its annual dividend yield currently sits at 3.10%. The company has increased its dividend compared to before and has declared a $1.76 dividend per share for shareholders who own shares of Amgen before ex-dividend date of February 11, 2021. The next dividend for the company will be paid on March 8th. Looking at Amgen's last quarterly earnings report, which was announced on October 28th, the company had earnings per share of $4.37, which showed a 16.4% plus positive surprise compared to analyst estimates. The company reported revenue of $6.4 billion, which surpassed analyst estimates by just 0.7%. Amgen is estimated to report revenue of $6.58 billion and earnings per share of $3.37 in its next quarterly earnings. The majority of analysts have lowered their estimates for earnings per share for Amgen over the past 90 days. You can see at the bottom left graph how the stock for Amgen has reacted after earnings report was announced. Within the past several quarterly earnings reports, the company's stock has decreased 6 out of 8 times after the earnings report by a one-digit percentage. The second undervalued pharmaceutical stock to review in this video is no company other than BristolMyers with ticker symbol BMY. BristolMyers is listed on New York Stock Exchange and was last traded at $62.01. But it is showing a fair value of $68.96 USD based on its real or underlying intrinsic worth. This shows an upside of 11.2% growth, but with a high level of uncertainty, making it another enticing undervalued stock in the healthcare sector to buy or add to your watch list right now. The fair value, as mentioned earlier, is calculated based on Finbox fair value methodology and allows investors to find companies that are being traded at a margin of safety compared to their fair valuation per share. Looking at BristolMyers financials, we notice that company revenue has been growing considerably over the past several fiscal years. In its last quarterly report, BristolMyers reported $10.5 billion in revenue, showing a 75% year-over-year growth. Company's net profit was also up by 38% year over year. As for company's balance sheet, both their current assets and total assets well exceeded their current liabilities and total liabilities, respectively, over the past several years. This results in a current ratio of over 1, suggesting that BristolMyers has enough financial resources to meet its short-term obligations. The company is currently showing a positive free cash flow, mostly from its operations. Looking at peer benchmark review, you'd notice that BristolMyers has a market cap of over $140 billion. BristolMyers stock had a one-year stock return of 0.6% compared to an average of 4.2% return for the healthcare sector. From a stock volatility perspective, the stock has a beta of 0.65, which is lower than the beta of 0.78 for the healthcare sector, suggesting less volatility in the stock price for BristolMyers compared to the sector median. BristolMyers is an American pharmaceutical company headquartered in New York. It manufactures prescription pharmaceuticals and biologics in several therapeutic areas including cancer, HIV/AIDS, cardiovascular diseases, diabetes, hepatitis, and psychiatric disorders. BristolMyers does pay a dividend on a quarterly basis, and its annual dividend yield currently sits at 3.16%. The company has increased its dividend for 3 years in a row and has declared its latest dividend for the value of 49 cents per share for shareholders who own shares of BristolMyers before the ex-dividend date of December 31st. The next dividend payment for BristolMyers will be paid on February 1st. Looking at company's last quarterly earnings report, which was announced on November 5th, BristolMyers had earnings per share of $1.63, which showed a 9.3% plus positive surprise compared to analyst estimates. The company reported revenue of $10.54 billion, which surpassed analyst estimates by 1.9%. BristolMyers is estimated to report revenue of $10.7 billion and earnings per share of $1.41 in its next quarterly earnings, though majority of analysts have lowered their estimates for earnings per share for BristolMyers over the past 90 days. You can see at the bottom left graph how BristolMyers stock price has reacted after earnings report was announced. Within the past several quarterly earnings reports, the company's stock has decreased 3 out of 9 times after the earnings was released, and these declines were shown to be only about one-digit percentage declines. Lastly, I wanted to do a quick comparison of the two companies that we talked about versus some other big names in the pharmaceutical sector, namely companies such as AbbVie, Novartis, and Pfizer. You notice the latest stock price and the fair value for companies based on Finbox methodology and analyst target price on this graph. The largest company here in terms of market cap is Pfizer. In terms of price to book value, BristolMyers has the lower of all, at only 2.7 times book value, followed by Pfizer and Novartis. A price to book ratio that is greater than 1 means that the stock price is trading at a premium to company's book value. You could also see the dividend yields for each of these stocks. Lastly, here you could see the calculated stock value for these companies based on Ben Graham's value investing formula. There you have it, folks, my top 2 picks when it comes to investing in undervalued pharmaceutical stocks right now in the stock market, or to add to your watch list. Do you own any of these stocks in your portfolio? Do you have perhaps other pharmaceutical stocks in your investing portfolio that you can share with us? I would love to hear from you, so be sure to leave a comment and let me know what healthcare and pharmaceutical stocks do you have in your portfolio right now, or what companies are you considering to add to your portfolio in the remainder of the month. I hope you found this video beneficial and you gained something of value from it. Please note that this video is based on my extensive research, and nonetheless, please do your own due diligence before you buy any stock in the stock market. Of course, please be sure to give this video a thumbs up and share it with someone who might benefit from this video as well. And don't forget to subscribe to Moementum channel. Here on Moementum, we post weekly videos about stock market investing, finances, and financial freedom. Thank you everyone, and hope to see you next time.